Did you know that Britain has lost over 500 billion in household wealth simply because we're obsessed with keeping money in cash rather than investing? That's £500 billion gone. Money that could have built businesses, funded innovation, created jobs, or simply made ordinary families richer. This is the reason why the UK feels poorer than it did 30 years ago, why our best companies are being sold overseas, and why Britain risks becoming a second-tier economy. In today's video, I'm going to explain exactly how this happened, why the UK is falling behind, and what it means for our future. Chapter 1, the 500 billion problem. Let's start with the shocking statistic. Over the past decade, UK households have effectively lost 500 billion. How? By leaving 1.5 trillion sitting in cash ISAs and bank accounts instead of investing. Now, holding some cash is sensible for emergencies, but here's the problem. Over time, cash gets eaten by inflation. If inflation is 5% and your savings account pays you 2%, you're losing 3% of your wealth every single year. That's like pouring water into a bucket with a hole at the bottom. It looks full, but it's draining away. Meanwhile, over the same period, stock markets, especially in the US, have gone from strength to strength. If just a portion of that 1.5 trillion had been invested, UK households would be £500 billion richer today. That's roughly £10,000 per person gone. And remember, that's just a direct financial loss. The real tragedy is the opportunity cost. The businesses never funded, the jobs never created, the cures for diseases never developed because capital was sitting idle. Chapter 2, why the UK refuses to invest. So why does Britain keep so much money in cash? The answer is a mix of fear, culture, and bad advice. Unlike Americans or Australians who see investing in stocks as normal, Brits are deeply risk averse. We love the safety of cash, even if that safety makes us poorer. And according to Andrew Craig, financial journalism has made things worse. Take Paul Lewis, a well-known BBC journalist who has proudly said he's never invested in the stock market and tells his audience to stick with cash. Now, he might mean well, but let's be honest, that advice has cost people tens of thousands of pounds. When respected voices tell the public that investing is dangerous, it reinforces the fear. And when millions follow that bad advice, it doesn't just harm individuals, it harms the entire economy. Think about it. If Britain doesn't invest in its own companies, how can those companies ever grow? Just to be transparent, a lot of my recent content ideas have come from Andrew Craig. He's a financial author who I recommend looking into, especially his book, How to Own the World. Before we crack on, I want to tell you, now that in my 24 years of investing, I've seen too many people with financial regrets, mainly in and around retirement age. That's why I'm obsessed with helping people to retire early. So if you can subscribe, that would be a big help to me and my channel. Chapter 3, the national consequences. This isn't just about personal finance anymore. It's about national economics. When capital markets don't work properly, businesses can't raise money. Startups can't scale. Promising British companies like Arm Holdings or Deliveroo end up listing in America because that's where the money is. And once they're listed abroad, who benefits from their growth? Not the UK. It's no coincidence that the British GDP per capita is basically the same as it was 30 years ago. Meanwhile, countries like the US, Singapore, and South Korea have surged ahead. Here's a shocking fact. Outside of London, UK GDP per capita is now comparable to countries like Poland or even Albania. That's what happens when a country refuses to invest in itself. As always, nothing in this video should be taken as financial advice, and the full disclaimer can be found in the description below. Chapter 4, billionaires, inequality and misunderstood wealth. Now, this is where the debate gets heated. Many people look at billionaires and say they're the problem. They're hoarding all the wealth. But let's unpack it. If all the millionaires and billionaires go abroad, they take with them their services, businesses, and jobs. And obviously, thousands of workers will lose jobs and won't be paying the taxes they would have paid. Jeff Bezos owns 10% of Amazon, about 10%. If he's worth 100 billion, that means other people, shareholders, employees, pension funds own the other 900 billion. That's wealth shared across tens of millions of people. And beyond that, think of the services Amazon provides. Cheaper goods, faster delivery, cloud infrastructure, even digital products that reduce waste. This is what people get wrong about trickle-down economics. It's not about billionaires handing out cash, it's about innovation making life better and cheaper for everyone. The real scandal isn't that billionaires exist, it's that in Britain we're not creating enough of them. Our system punishes ambition instead of rewarding it. When Gary Stevenson says just tax the rich, he's wrong, in my humble opinion. Yes, the tax system needs to change 100%, but we need people in charge who understand economics, who understand business, innovation and capital markets to create a fairer tax system, to improve the education system, to improve the financial system, to improve basically everything. This is sadly not the case at this moment in time. Chapter 5, the power of compounding. Here's the key concept that most Brits simply don't understand. Compounding. Compounding is what happens when your money earns returns, and then those returns themselves earn returns. It's like a snowball rolling downhill. It starts small, but over time it grows into an avalanche. Yet surveys show that 60% of Brits don't understand compounding at all. Let me give you an example. I invested £500 a month into a stocks and shares ISA at 18 for 6 months, but stopped and spent all my money on a lad's holiday to Ibiza. Huge mistake. This was down to a lack of financial education. Let's say I was taught about things like compound interest at school. I know I would have invested from 18 to now, so that's a full 24 years. If I got average returns of 10%, that would mean I would be sat on £594,000. And looking at that huge amount, 450,000 is made up of interest earned. This is the power of consistent investing in index funds, for example, the power of compound interest. Invest £100 a month from the age of 20, and by retirement, you could have hundreds of thousands of pounds. Wait until you're 40, and the total is a fraction of that amount. Time and compounding, not luck, are what builds wealth. I've been investing into index funds for my daughters for the last 6 years. If I convince them to keep investing, they'll be financially free by the time they are 40, if not sooner. Chapter 6, personal responsibility and national culture. Now let's get personal. The truth is, Britain's financial stagnation isn't just about government policy. It's about our culture. We spend 5 to 6 hours a day staring at screens. Most adults haven't read a single book in the last year. Nutrition knowledge is poor. Exercise levels are low. Meanwhile, the wealthy, the ones we love to hate, are often the ones reading hundreds of books, compounding the knowledge and applying it to businesses. This isn't about privilege alone. It's about habits. It's about choices. Yes, the system could be better, but blaming billionaires while refusing to improve our own skills or financial literacy won't fix anything. We need a national reset in how we think about money, investing, and personal responsibility. Financial education leads to financial literacy, and financial literacy leads to financial freedom. I believe this with everything I've got. Type book below and I'll give you my top 5 investing books after reading over 300 books on investing and mindset over the last 6 years. Chapter 7, A Better Future. Here's the optimistic view. We can still turn this around. Literally anything is possible. Britain has incredible advantages. Our language, our legal system, our universities, our history, and yes, even our culture of creativity. If we combine those strengths with a more ambitious attitude towards investment and innovation, we could build a future where everyone benefits. A future where Britain isn't falling behind, but leading with technologies like crypto and AI. A future where ordinary households are wealthier, not because they sat on cash, but because they invested in the growth of the future. Summary. So, what do we do about the 500 billion loss? On a personal level, we start by learning, by understanding compounding, investing, and the importance of capital markets. We stop blaming billionaires for everything and start asking how we can build wealth ourselves. Remember, this is just my opinion. On a national level, we need to demand policies that encourage investment, support innovation, and make Britain a place where companies can grow, not just a place where they get bought out. Because if we don't change, Britain risks slipping into permanent decline. But if we do, if we embrace investment, knowledge, and ambition, then the next 500 billion won't be lost. It will be created. And that's a future worth fighting for. If you want more info, like exactly how to invest and what to invest into, I've just published a new playlist on this very channel called How to Retire Early, Step by Step, made up of 5 easy to follow videos, and importantly gives you all the info you need to retire early. All I would say is to watch the videos in order and to take some notes, otherwise you won't learn the information and you probably won't retire early.